Alrighty, traders. Hey, this is Blake Morrow. Can you guys hear me okay? Test.
Yes, we can. Good morning, Blake.
Hey, good morning, Stelio. So you can hear me all right?
Yes, sir.
All right, very good. I am, how did that happen? Okay, there we go. Dale's not in today. We gave him President's Day off. It's like we knew it was going to be kind of slow. So we knew it was going to be kind of slow, so we're just kind of just let him take the day off and enjoy. And so therefore we're going to keep this fairly short, fairly quick, but that doesn't mean that we don't have things to cover. And I want to point out specifically, if you look at Bitcoin actually hit the 50,000 mark, or really, I don't know if it actually hit 50,000. It was really damn close though. We went as high as 49,700 roughly, really close. But what we did is we popped out of the ascending wedge. And it's interesting because that hasn't affected anything in risk, but that might be because the US and there's a lot of, North American traders that are actually not going to be doing anything, being that we're out of, we're in a holiday. But I think we got to be careful with, hold on really quick. Some people are saying that there's sound. Bellu, okay, thank you, Bellu. Let's see. Looks like we have a little sound issue on YouTube. Thank you very much, Bello. I appreciate that. Okay, so anyway, with Bitcoin, we had a little bit of a reversal. It hasn't affected risk at all. Obviously, stocks are higher this morning. Everything's just elevated. Dollar's a little weaker. Actually, the dollar's quite weaker, especially if you're taking a look at the cable. I mean, the cable's breaking out. This is, trying to complete our bull flag pattern. Probably going to challenge 140. As you guys know, I'm really bullish the cable right now. If you watch the week ahead video, you guys already know that. I'm really bullish here. I'm not necessarily bearish the US dollar, but I am against the sterling. So that's why, these currencies like the pound Aussie, pound New Zealand, I know I talked about it during the week ahead video, but like the pound Aussie, I expect to break higher towards 180 and above 180. The pound New Zealand is above 192. Got a little bit of an ascending wedge here, so I am a little concerned with it right at this very moment. But I actually think that the pound New Zealand eventually is going a lot higher. I think we're going back towards maybe 195, obviously first around the 618. You can see the euro pound breaking down that I expected. I'm anticipating a move back towards 85 pence, maybe even lower. Obviously we have some support coming into play around 86.25. So, I expect the pound to outperform is basically what I'm saying here. Are we going to continue? Are we going to continue to have US dollar weakness across the board? I'm not so sure. I mean, you when you start looking at, like here's the Kiwi, for example. I'm just going to, show you this one specifically. You got the Kiwi knocking its head up against resistance, and it's failing to break out. This, you can tell it's not a, all US dollar pairs are weak. This is a function right now of risk on, and we're seeing stocks move higher. And as long as stocks continue to move higher, I think you're going to see, generally speaking, the dollar weaken a little bit. But if I was buying risk and I was long equities, I'd be a little nervous that some of these commodity currencies are underperforming. Like the dollar Canadian, it's pushing back towards my. I'm about ready to get stopped out for just a small loss because I bought it last week right here, but my stops were a lot deeper. I just kind of moved them below this channel support here. Look, I'm surprised that it's. I'm not surprised that the dollar Canadian is trading a little heavy. I'm just surprised that we haven't flushed through these lows. And if I was long risk, I would be thinking about that. you know, I'll continue to play the dollar Canadian on the long side. You know, and I might actually, I don't like adjusting my stops lower, but I had moved them up already. And mine are just actually below this channel support here. But that doesn't, you know, the thing is I still think that we're building a bigger base. And again, if you have stocks that are at all-time highs here, you know, how come the dollar Canadian, or, you know, the Kiwi dollar, the Aussie's trying to break higher, but still it hasn't broke out. You know, why is that? Why aren't those like really surging higher, those commodity currencies, following, you know, the equity markets? And that would concern me, you know, being long equities. So anyway, just some food for thought. You know, what I did want to do is I wanted to bring Stelios and Steve in for a little bit so they can talk about the markets. But I want to talk to Stelios really quick about his new book. So Stelios, tell us about your new book that's out.
Well, good morning, everybody. For people who don't know, I was involved, you know, people have heard of the LIBOR case, the LIBOR scandal, as they used to call it. Well, I was one of the people involved in it. I got caught up on my first trading role. Basically, I did nothing wrong, but I got caught up from my bosses and their bosses and everything. And I just wrote the story of it because it took years for it to complete, and it did complete in a really good way. And I wrote the story about it, and I decided I want to write a book to let people know what was really happening and not what the media were saying. So I wrote it, and it's coming out. It's available in pre-order on Amazon and elsewhere, and it's coming out, I think, officially on the 26th. But yeah, it's a very interesting story if you want to read something related to markets. Yeah,
a lot of people don't even know like the, you know, major parts of it. Why don't you just, you know, give a, you know, just
without giving away the story?
Well, I'm not gonna talk about details, but you know, people know what LIBOR is, right? It's a rate where banks borrow from each other.
But I mean, if you want to explain, you know.
Yeah, it's a whole issue about a practice that was done for decades, and when the financial, which practice basically was the banks were nudging this rate by like a basis point either way, because obviously they have big positions and something suits them. And this was done for decades, and it's something that was done when I arrived at the bank in my first trading role. And I was told that this is how it's happening, and you know, it just kept happening. And after that, after the crisis 2008, there was this phenomenon called low balling, where basically banks, to show that they were not in trouble, that they can actually still borrow money, they moved their LIBOR submissions by massive amounts, like 100 basis points, 200 basis points, whatever it was. And then that raised question marks, and that was definitely not right. And when the regulators went in to investigate, they saw that, which went up all the way to the Chancellor of the Exchequer in the UK. And they said, okay, we're not going to touch that. We're going to go somewhere else. And they decided to go after people like myself for doing something very different. And anyway, it's a long story. It talks about how things can change from one day to the next without you doing anything wrong, and how you can face great adversity and how do you handle it. You know, that's part of what I'm describing. You know, how do you,
in essence, you were accused for a clerical job you were doing as a junior.
Yeah, and something that was done for decades. So anyway, it is a long story. It's a very interesting read, and you know, one part of it is actually describing what happened. It's what I'm writing is all public domain. I'm not writing anything new apart from some of my personal experiences, but nobody actually reported it properly because they all wanted to bury it under the carpet, to, you know, hide it under the carpet. So I'm reporting I'm showing what really happened, but I'm also showing it from a human aspect of, you know, how do you deal with something like that? How do you you know, it's not an easy thing. You know, it's something that can really break somebody. And I was lucky enough. I had a very supporting family and friends around me, and we got through it really, really well. But anyway,
it's guys, I highly recommend you guys, you know, pre-order it. I mean, look, it's what the pre-order price is $7 sterling.
Yes.
I mean, that's, it's $10, guys, $11 US if you guys are going to buy it. I put the link in the chat box. Make sure you guys order your copy. And it's cool. Like I tweeted over the weekend, it's like, you guys listen to Stelios every day. Why not hear his story about what he's gone through? How amazing is that? I wish I could, I wish I could write a book and tell you guys my experiences as a, strip dancer in Guam part-time.
I was about to say as a hooker, and then you say as a strip.
Male dancer, part-time when I wasn't serving. So no, I'm joking, but really it's, this is really cool that you guys listen to Stelios every day. You can hear him, you hear his voice, you wonder, you hear about his experiences, you know that he's an experienced trader. He comes from some bank somewhere, but really learning his background. I mean, how amazing is that? So yeah, you guys pick up one. It's awesome. So I put the link in our chat box for you guys. Here, I'm going to do it again if any of you guys popped in a little bit late. There.
Thank you very much, Mike.
Oh, you're welcome. And I think everybody can read it or should read it. And even though we're gonna get a signed copy, I'm still gonna order one. So I'm getting
a special signed copy. Yes.
I'm getting a special signed copy, guys. That's one of the benefits of being a partner with somebody in ForexAnalytix.
That's the only reason we actually made him a partner.
That's exactly, yeah. It's like he's like, hey, listen, I'm writing a book. We're like, okay, you're partner. Just kidding.
Your partner.
Your partner. No, I'm joking. But it's cool. He's been writing it for a few years, guys. It's going to be a really neat read. So let's talk a little bit about what we've got going on. And Steve, since you just popped in, you'll notice Bitcoin is challenging this key about the $50,000 level. And I have to tell you guys, I was talking to my neighbors, and I think you guys might remember. I was talking to my neighbors that, husband's a doctor, wife, she's been meddling in cryptocurrency. If they made 5 times on their money, cashed out, and are buying another cabin, they own like a few cabins, they're buying another one. So, I mean, but and I said, well, why are you pulling off here? She goes, well, it's gone up quite a bit. And, I'm like, yeah, good point.
Yeah, I have the opposite story to report, Blake. It's the usual stories that we have. A very friendly, nice guy that used to work in one of the cafeterias, PC, pro-COVID.
Oh, okay.
that I used to visit a lot to have my, to have my morning coffee, etc. We were in a very friendly basis with him, a very, very nice guy. So he called me. He has my phone number, and I was kind of surprised, as you understand. And he was like, "Hey, Steve, sorry to bother you." etc. I was like, "Yeah, sure, absolutely. What's the issue?" He's like, "My nephew. He has started. I know what you do as a work, of course. My nephew has started." Busting me, about getting involved in cryptocurrencies, and he puts all his money there, and he's convinced his father to also get somewhat invested in that. And I wanted your honest opinion about what you think about all that.
Yep.
And I'm like, how old is your nephew? Like 19. Okay, so then I explained the story, how bubbles form, and how when the retail crowd, is like starts getting a sniff of it, mm-hmm. and goes all in, that this is when you should be extremely cautious, and that nobody says that it can't go higher, but I would be very, 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 very scared if I was him, so on and so forth.
So what's your overall, what was his take on it after you explained?
No, he was very cautious. He's a smart guy.
Okay.
I mean, he might be working in a cafeteria, but he has like a university degree, etc. So he's a smart guy, and he was very, very, very cautious. So he called me, to say like, doesn't sound like very normal to me, and I'm a little bit, afraid, and it sounds too easy, and they present it like it's a slam dunk, and I wanted your take in,
Yeah.
on it.
I have friends who have asked the same, and I just always say, if you want to get involved, of course do, but just risk what you can afford to lose. End of story.
Yeah, I mean that's the thing, right? And Ingmar said one thing it seems to be is Bitcoin. It's much harder to sell it down now. Momentum of previous dips seem to have faded, and that's because institutional money is involved. I mean that's what all there is to it. And look, I would love to buy Bitcoin on a dip. I'd like to just put some money away and just sit on it. I can't pay these prices. It's not saying that we're not going to go any higher. It's just against my grain of what I do. And hopefully we see some profit taking. The one thing I want to point out though, and so wait, before I go any further, I have to say, just reiterate, I can't agree with you more. And that's because the general public is not really involved. They're getting involved now, but they're not involved from the beginning. Not like, in 2017 where you had
exactly, and coincidentally, quote unquote, of course, coincidentally, they were the only other time they were involved was in 2017, just before prices deflated by like 70-80%.
Yeah.
So I'm afraid we're getting there again.
Yeah. So, but you also have to imagine there's a lot more institutional money behind it. So I really think that even if we get a serious move lower in Bitcoin, it's going to be one of those, we maybe sell off towards 30,000, and it's not. I don't believe it's going to be a $30,000 to $10,000 move like it was before, because there's so much institutional money involved. So I'm just going to reiterate. And yeah, big investors. There are a lot of people. Yeah, your Elons of the world. Correct. There's a lot of people involved now, and a lot of big money involved. They are going to be less likely to sell. So you're going to see dips, but the dips are going to be fairly shallow. I would not be surprised if we see a 20% correction from here, but just keep in mind that a 20% correction from current levels is only, what is that? Like, let's say, 38, 39,000. We might be able to get maybe a move back down towards the 30,000 mark, somewhere down there. But I would not expect a big dip, guys. I just really wouldn't. There's too much real money involved now. Does it make sense?
No disagreement.
It does, yeah.
I mean, I don't think it's going back to 3,000 yet. Although I have to reiterate, I've said it many times, and I have to reiterate that I wouldn't be surprised when the end of this cycle comes in risk assets. I still find it feasible for cryptocurrencies to go to zero.
I don't know how, like, zero's maybe it will, but one thing that I still concerns me is when central banks, or anybody for that matter, really starts to take a good look at it and say, where's mine? Where's my piece? Where's my take? And that's what I'm thinking. What happens there? What happens if somebody says, I really want to, like, whether it's, the Bank of England or what happens to central banks if they feel threatened? What do you guys think there?
Well,
to begin with,
governments
from the reaction,
the crap of it, right?
To begin with, from the reaction
hold on, Steve. You guys are talking over each other.
I just said,
what'd you say?
I think if governments and central banks start getting worried about cryptos, they're going to regulate the crap out of them.
Right, exactly.
End of story.
And so, Steve, go ahead. What were you going to say?
To begin with, from what I've seen so far, I don't think they consider them a threat. Because if they did, we would have already seen, some move towards very strict regulation, etc. But if
I
it
don't
comes
agree
to
with that. Oh,
why,
because as you see with central banks, they're more reactive than proactive. So, they're gathering probably more of a consensus amongst all the central banks on how they want to handle this situation versus anything else. I don't think it's.
I don't think that's the case here. I think that very frequently central banks appear to be reactive, but they are reactive uh, by choice or by lack of choice in many cases. And I can go into detail, but this is not the conversation now. I think they're letting the whole crypto digital currency idea roam around because eventually that's what they want to do themselves. They want to have all actual fiat currencies in digital form so they can control absolutely everything from money laundering to tax evasion to everything. So I think that for the time being, getting the audience acquainted with the idea, I mean the public acquainted with the idea, is in their favor. When they're ready to launch theirs, I think they will make everything else extremely hard to own, transact with, so on and so forth.
Yeah, I could agree with that. I could agree with that argument. Yeah, I mean, I could see that. Well, hey guys, so I wanted to ask, is there anything that you wanted to cover this morning, in particular? I talked a little bit about I talked a little bit about the pound, and as you guys know, if you watch the week ahead video, I am, very bullish the sterling right now. I'm long the pound versus a lot of the crosses like the pound Aussie, the pound New Zealand, and they are, obviously stronger this morning. But I am looking for those to continue higher moving forward. So I think that they're pretty bullish. And I still think that the euro pound is going a lot lower here. It's going to be moving down towards 86 pence, because I don't believe it's a dollar all dollar story. Yes, the dollar is weaker, but I think it's going to be more weak against certain currencies than others. Is there anything that you guys wanted to talk about in particular, or take over the charts and show anybody that you're
Having
looking
to
at?
do with the crosses you just mentioned, Blake, I think that in order for something like that to happen, I mean, to see those resuming the rebound higher, I think that we will need necessarily some turn to risk off because we know how much, we know how correlated they are, how inversely correlated actually they are.
They'll explode when
With
there's some risk
yeah.
off,
If
because
we
they're
if we
already
turn to
moving
risk
in that
off,
general direction.
they explode. Yes.
They to get the, like, for a pound New Zealand, if just taking a look at longer term, to get one of these moves where you start to see a 600-700 pip move higher from current levels, yeah, you're gonna have to see some risk off. They're already making their way there, and that's the scary thing, because if you are short the pound New Zealand, you're short sterling in some way, shape, or form, you could literally have this trade shoved so far up your rear end you won't even know if it's day or night. So anyway, Irina asked about the US dollar Japanese yen. The US dollar Japanese yen is stronger here. It's actually above the 105 and a quarter that if you remember the bias chart from Friday. This is the bias chart. And by the way, we're going to do bias chart analysis in approximately 50 minutes from right now. So don't worry if you guys are listening in and you're like, are we still going to do the bias chart? Yes, we're going to do the bias chart. But we were knocking our head up against resistance here, and there's a lot of breakouts. I mean, if you look at the pound yen, the pound yen is very, very strong here. As we're reaching for this 161% extension. You can see that we've got some horizontal resistance coming up in the pound yen at around the 148 level. So we're starting to see the pound really show some life against some of these currencies, not just the dollar, but not just the Aussie, but man, the yen as well. What do you guys think there?
Well, for me, it's actually interesting that the yen is not gaining. It's actually losing ground, even though I know it doesn't matter that much. But we had the GDP today, which printed quite a bit stronger than expected. So it seems that the yen is just following risk now. It's correlated with risk again. So equity is going up, dollar yen is going up. But yeah.
Yeah, I mean I mean it looks pretty as far as like Japanese economic data, I can't remember the last time I've actually looked at Japanese economic data for guidance with currencies. I mean, I can't even remember a time prior to 2005 actually. So maybe 2005 and prior to that, we used to look at Japanese data, but I don't ever recall that. So it's interesting.
Yeah. And as for the pound, you know my view. I stated quite clearly in late 2020. I think that in the medium term, the pound's going to do pretty well. Obviously, it could be choppy. I didn't expect it to do this well this quickly, but if you look at the cable chart, the weekly chart, we've broken a huge like 12-year trend line. So I think it has a little bit more to go now.
Having to do, guys, with USD yen, I think it's not that it's now following risk, it's following what it mostly follows usually, which is the yields which are climbing, because after a long period of time, actually the yield move has temporarily recoupled with what risk assets are doing, because for a period of time we were actually seeing the S&P moving higher and yields still moving lower. It was mostly due to the huge intervention, of course, post-COVID. So for the time being, yields seem to have recoupled with the S&P, and that what in essence has also recoupled USD yen with risk.
Yeah, and but how long do you think that can last? I mean, think about yields moving higher. With yields moving higher, is it going to eventually weigh on equities at some point? I mean, I would think it would. What do you guys think there?
Fundamentally speaking, yields should keep on moving higher and move extremely higher. But knowing how much monetization of debt this year the Fed is going to have to do to fund all the stimulus plans, because I don't believe we're going to only have one stimulus plan, whatever comes now. I believe that's going to be the appetizer, just the appetizer for the year. I think it's even likely that we're going to see this uncoupling again of yields to risk, because if we have an explosion again of the Fed's balance sheet from 7.3, 7.4 trillion dollars now to like 10 trillions, which I believe can easily happen within the year, I think we might see again a period that yields would be actually moving lower, but of course the S&P will keep moving to the upside.
Well, it's I was just looking at and just so you guys know, I don't read a lot of stuff from Zero Hedge. I follow Zero Hedge on Twitter, so I see stuff that they're noting. But he pointed out that that house prices in the U.S. are above the 2005 peaks now.
Wow.
Here in the United States.
Yeah.
And I was talking, I was talking to my, my brother-in-law, who's a realtor. He in 2020, he got an award. His award was like the top 5% producer, and for they're with a big real estate firm, or he is. And top 5% producer is a pretty big bar, but he's, I was talking to him this weekend just to congratulate him and tell him great job, and I'm proud of him, yada yada yada. anyway, he was telling me that that in Arizona, Maricopa County, which is the most populated county in Arizona. Now, granted, we do have typically a really hot real estate market. So when real estate is hot, it's really hot here. Let me see if I can pull this up for you.
By the way, we had stronger Canadian manufacturing sales. Not that it means anything really. 0.9 versus 0.6 month on month.
Got it.
And the previous one was also revised higher from minus 0.4 to positive 0.2.
So Maricopa County has 4.48 million people in 2019. So I think it's probably over, it's over, 5 million now.
More or less the size of Athens in population.
Yeah, and that's just the county that I live in, right? And that's, if you're looking at a map, that's this area, right? All of Arizona is probably, probably closer to 7 or let's see, Arizona population. Oh, whoops. So yeah, we got 7.4 million people. All right. The reason I want to point this out is in Maricopa County, with probably about 5 million people or close to 5 million people, there are 2,600 residential real estate homes for sale in the entire county. That means, the real estate market's really hot because the inventory is like the lowest they've ever seen. And builders can't build homes quick enough. But, he's like, I'm really worried about being a realtor. And I said, why is that? He's just like, well, because first of all, if inventory stay this low, it's like the chances of you being there's a lot of real estate agents in where we live. It's just kind of part of a booming, geographic area. He's like, we're all competing for the same house. Like the chances of me being able to sell a house when inventory is that low is hard, especially when there's so many realtors around. And I'm like, oh, that's crazy. And he's like, yeah. And then plus, rates are going to probably be going higher. And when rates go higher, prices are going to come down, obviously, to keep up with affordability.
Yeah, the Fed can't afford that, though. That's the thing. By the way, Blake, the Fed that isn't worried about inflation and all that, since you mentioned houses, lumber has hit all-time highs and has doubled since last year. Just another example of what signals commodities are sending.
There is no inflation.
But no inflation whatsoever. Don't worry about it.
Zero.
Zero.
It's going to be interesting to see, how the market responds to it. And, you're looking at yields. Here's the 10-year yield. I think it's safe to say that above 1%, you can't be bearish yields. So being, bearish bonds makes a lot of sense at this time, and you can see technically we got a bear flag on the 10-year bond market that should push us down towards, this previous breakout point you can see back here in 2012. So looks like bonds are going to continue to slide. Yields will continue to go up. And so, at what point does the Fed apply some sort of yield curve control, right? To cap the longer term yields. So any other charts, guys, that you wanted to show everybody?
Not from me. It's been very, very quiet overnight. Hey, Donald Trump got
acquitted.
Acquitted, yes.
Yes, he got
expected.
acquitted.
Was expected.
It was expected. And so he says he's going to be back.
I'll be back. Yeah,
he'll be back. Yeah. So, Steve, any charts that you wanted to point out or show the group here? But keep in mind, in about 40 minutes from right now, we are going to resume our analysis for ForexAnalytix subscribers. We're going to go through the bias chart as we do every day. Putting together.
I'll just show 3 charts, Blake, and then the rest for our subscribers. One is
wait. I got to step away because I'm gonna go. I've got to deal with my dogs. So I'll see you guys a little bit later. All right.
Absolutely, mate. Bye bye.
Thanks, guys.
So one the cable. Why is that? Because we are at channels resistance once again. Okay, so that's important for me. And once again, an important retest of this. We break higher from here. I think we might even see an acceleration. The second one is the gappy, because the gappy has actually accelerated after breaking through this important confluence at 143. We were talking about it. Now it has broken through another confluence at 145.20. The other one, which I had been talking about for quite some time and I was carefully monitoring, is the CAD yen. Let me find it though. There it is. Because, we were talking about the significance of like the 82.20 resistance area. We've broken above it. Quite an important development. And I think naturally we're headed higher. Keep in mind that, we might even, climb quite a lot higher while we remain within this channel. I mean, there is a lot of potential upside. So, a lot of the yen pairs have started looking, technically speaking, very appealing, and not by accident. I wrote in the end of week analysis, just look at the USD yen. The USD yen back tested this broken red trend line resistance as support, and it has been moving higher since. So I do think that the USD yen has a very good chance if it doesn't get rejected again from here. And why do I say from here? Because this is the 38.2% fib, also the 200 daily moving average. But something tells me that this time we might actually pass over it and actually find the important resistance at 106.50. So USD yen seems to have more upside potential here, and against the pairs that are doing good, it should continue to. These pairs should continue to do really well as long as the yen is being sold. Another yen pair for you, Aussie yen, testing key channel resistance as well. So that's another one at an important juncture. So some of them have started breaking out. Some of them are testing important resistance areas, but I think it looks like we might get more upside in those. Let me see if I can address a couple of questions, and then the rest, we can address. USD CAD, listen, nothing has changed for me having to do with the USD CAD, meaning you see this descending channel, we remain within it. So, I maintain a bearish bias, end of story, as simple as that. And Stelios, somebody was asking you if you would be buying silver here.
Oh, Irina was asking, yes. Look, I always want to be long silver. So if I didn't have any position, I'd be buying here. But what I would want to be doing is wait for a pullback. There's if you look at the daily chart, there's a nice ascending trend line, which coincides with a nice support zone at around 26.20. If we get there, I want to be buying. But I would be starting anywhere, because I always want to be long silver.
I agree. If I didn't, if I didn't have exposure to precious metals, I would want to have some. Although this divergence with gold is still troubling me, because I see it as a likelihood that gold is going to produce a lower low before exploding higher. And within that context, silver might show some weakness as well. Having said that, I have zero worries on a personal level about the medium to long term. In my mind, medium to long term, it's going to be a one-way street for a long period of time. Crude oil, by the way, broke through another little pennant and just resumes the upside. I mean, just unstoppable. I'm watching this market extremely closely. Gregor has shown that as well in the past, because frequently we know how well crude oil is correlated with risk assets, with the S&P, for example. Frequently, one will lead by a few days the other when turning lower. So I'm paying good attention to both markets. And if I see one of them turning lower and the other one not, I'm going to be very, very, very likely to be selling the other market as a catch-up trade. Anyhow, so see those of you that have access to ForexAnalytix in 35 minutes.
35 minutes, yeah.
Yeah, okay.
Thank you, Steve. Thanks, everybody.
Bye-bye. Ciao.
Bye-bye.